In this week's currency update, the Australian dollar has continued its slide in foreign exchange markets. The recent weak CPI, this week's surprise RBA rate cut, and the prospects of another cut as soon as August of this year have all undermined confidence in the currency. We did manage to trade above 77 cents on Tuesday ahead of the RBA as pricing drifted back to 50-50, but the surprise rate cut did hit the Aussie dollar lower, and as we warned last week, even though we weren't forecasting the rate cut, a rate cut would send the Australian dollar below 75 cents, and indeed it did, and we spent much of the last couple of days below 75 cents. The important quarterly statement on monetary policy from the RBA has added to rate cut expectations, and that's likely to continue to weigh on the Australian dollar in the next couple of trading sessions. However, economic data this week has not all been bad news. Business conditions came in above expectations, building approvals beat expectations, retail sales were above consensus forecasts, and the trade deficit was the best in 12 months. And while this week's federal budget might have been seen as light on reform, it was arguably seen as supporting the positive business outlook. All this, plus reduced concerns about the near-term outlook for China and elevated commodity prices, with iron ore remaining above $60 through the week, suggests that weakness in the Australian dollar should be limited to late 73 cents. Another factor that should support the Australian dollar and weakness is soft growth in the US. Q1 proved disappointing at just 0.5% annual GDP growth, while Q2 is shaping up to be slightly stronger, with lead indicators suggesting closer to 1.7% annual growth. That's still not going to be enough for the Fed to raise rates in June, in our view. Westpac is now forecasting the next Fed rate hike to be in September. The US dollar has been soft in foreign exchange markets this week, and we expect that weakness to continue in coming weeks. A key test will be tonight's non-farm payrolls and next week's retail sales. That should give us a better sense of how Q2 growth is shaping up. Now, next week, Chinese data will be important. Between this weekend and next weekend, we have a raft of data, including reserves, international trade, industrial production, CPI, and loans. And that data should also give us a sense of where China is traveling early Q2, and we would expect to see reasonable evidence of growth in the Chinese economy. We also have Westpac consumer sentiment on Wednesday. That will be an important measure of how the consumer saw the recent federal budget. These are all factors we can talk about in next week's currency update.